Recently listed financial services and information technology group headquartered in Cape Town. Its founders were Herman, Steyn and Guy Toms. It has a market cap of 1.8 billion rand, a price to earnings ratio of 13.2 and a dividend yield of 2.5%, and very much in the quantitative space. Correct me if I'm wrong, Paul.
Yep, that's it. I think Herman Steyn was one of the guys that sort of early on, he was at Old Mutual and then he went to Investec, and that was what he kind of did. And at some point, I think around 98 or so, he left, and with Guy Toms, two chums in Cape Town, they established this business. Somewhere along the line, I think they picked up one big important institutional client like the Cape Metropolitan Metro Authority or something, and they started out with that, and they pioneered that quantitative approach. But what's interesting is then that group, Prescient, continues for many years as privately held, and then a couple of years ago they decide to list on the stock exchange. And instead of a front door listing with a normal prospectus and a bit of hoopla and fanfare, they did a reverse buy-in into an existing sort of semi-defunct listing called PCT, which was an IT company. So what happens in that case is that the shares are then issued to the owners of the private company that dilutes the existing partners. So it's a bit of a backdoor type of thing, nothing wrong with it, but it does mean that it kind of happens without anybody noticing. And I do get the feeling that people still haven't fully grasped what it is that they're dealing with in this case.
Have you fully grasped what they're dealing with? Let's hope that Herman has fully grasped what we're dealing with.
Look, these guys got a brilliant track record, especially in the high yield, flexible income space. They run very good funds in South Africa. They used to be one of the Nedbank branded products as well. They gave Nedbank notice, I think, about with listing time. So they lost, I think, about 10 billion in money from Nedbank on that side. But certainly on the Nedbank flexible income space, those type of mandates, they certainly do know how to manage the money, and they certainly do know how to protect money as well. So they're one of the leaders in the derivative space. Nedbank Positive Return is one of the other funds that come to mind. So their Positive Return Fund, their Flexible Income Fund, is probably some of the winners in South Africa.
Well,
more
so
the absolute
you really
space.
have grasped the company.
Yeah.
Thank goodness for that.
They got about 80 billion local assets under management at the moment, which is not too small anymore. And they bought the Irish asset manager as well, I think last year or a year before, I think at the right timing perspective. And there's another 5 billion in euros funds under management. So it gives you a bit of a rand hedge component to the investment as well. And I think, like Paul said, if you look at only the 6 months, they're trading on a PE of 13. But you must probably half that. And that was in a low upside environment for equity markets. We know these guys make more money in performance fees. You see that in Coronation's results recently. So you're probably going to get this company at a 7 or 8 PE and a dividend yield in excess of 5 or 6%.
Paul, I'm sure you feel a little more clearer. Do you?
Yeah, no, it's looking good.
Helping him out.
There are two question marks for me. Firstly, they did indicate in the results that they had less opportunities for their kind of asset management. So I don't know exactly what that means. I guess it's because they've got derivative structuring inside the portfolios. The second thing is that Irish asset manager they bought, which has got 5.5 billion euros in it, which is like 70 billion rand, they bought for like 16 rand 50. Okay, maybe it was 16 million rand, but it was like nothing they paid for it, which I can only assume means that there's something wrong with it. In other words, it was Irish and it was broken and it was the financial crisis. It probably has a thing where they kind of lost so many people so much money that they're not allowed to charge them fees for 75 years or something. So I got to get to the bottom of that.
Herman, please get to the bottom of it. Please help him get to the bottom of it.
Because to buy something with so many assets in it at such a low price just doesn't seem right to me. The other quick thing to say is they've also got a securities stockbroking business in there. And they've also got quite a nice business which provides an asset management outsourcing service. So if you're just a common or garden asset manager but you want to target funds inside the pension net, you can go to Prescient and Mike Buckham and his team will provide you with a platform that you can sort of use their insurance license to do. And that, I think, has got 12 or 14 billion under management. So all of this put together, it would be fabulous if in 5 years' time this thing looked as good and as big as Coronation. I don't know if it can happen, but...
Can it happen?
Look, I think they got the Manco, which Paul now discussed, the management company. They got that license and they're operating well with that, so they're white labeling for some of the customers. They got the unit, the administrating company as well, with the pension funds in the background. They certainly do know. I think they're number 2 in the country on the security side and on the prime broking side. And then certainly I think they do know how to manage some kind of assets in South Africa. The fees will never be like Coronation's, because remember on income fund and on positive return type of absolute funds, the fees are much less than what you have in bull markets for equity fund managers. But certainly we like the company.
Hot or not, Paul?
Yeah, whatever. Let's give it a hot. It's big enough.
Whatever, give it a hot. Hot or not?
I'm going to go for hot.